Howdy, everybody. Welcome to Liberty Call. Today is Thursday, March 13th, 2025. Hope you're having a fantastical day out there on the interwebs. It's a gorgeous day here in Colorado. Temperatures in the 60s. I mean, I got pants on, but I probably could have worn shorts. It was a little hot going. I apologize for being a little bit late. Had to run to town. It's going to snow tomorrow, so I figured I'd get my shopping in before the bad weather. So anyways, like I said, hope you're having a fantastical day. My Cougars are playing Colorado in their first game of the Big 12 championship tournament. So let's all give some good vibes for the Cougs. They're pretty good this year. So let's hope that they have a strong run into the tournament. All right. Well, markets are officially in correction territory with the S&P 500 down over 10% from recent highs. And as Trump's latest trade war move, slapping 200% tariffs on European wine and cognac. Man, I was going to go buy cognac tomorrow. Shoot. All right. Send shockwaves through the global markets. Despite the turmoil, Treasury Secretary Scott Bessent is downplaying the sell-off, focusing on long-term investments. Meanwhile, the Senate Banking Committee has advanced the Genius Act, a major stablecoin bill, signaling a push for clearer crypto regulations. So before we break all the news down, if you could do me a favor, give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All righty. Well, let's jump into the markets. All right. Dow Jones was down 1.3%, 536 points, closed at 4814. S&P 500 down 1.4%, 78 points, closed at 5521. NASDAQ down 1.96%, 345 points, closed at 17303. The VIX was up 1.77% today. It's at 2466. Canada down 0.9. Brazil up 1.43%, and Mexico down 0.31. Headed to Europe, Germany was down 0.63%. The UK up 0.02%. France down 0.64%. Netherlands down 0.14%. Spain up 0.14%. Italy down 0.8%. Switzerland down 0.24%. And Portugal down 0.61%. Russian exchanges both red again today. MOEX down 2.05%. RTSI down 2.04%. And the overnight markets, the Nikkei in Japan was down 0.08%. Australia down 0.48%. New Zealand down 0.05%. In China, the Shanghai was down 0.39, Shenzhen Component down 0.99, China A50 up 0.12, DJ Shanghai down 0.55, Hang Seng down 0.58, and the Taiwan weighted up 0.94. All right, so those are the markets for today. So, all righty, good stuff. Let's jump into our market recap. S&P 500 slumps into correction territory on trade war fears. The S&P 500 tumbled into correction territory on Thursday as fears of an escalating trade war overshadowed fresh data showing a slowdown in inflation. The producer price index increased at a slower than expected annualized rate in February, while month-on-month figures were unexpectedly unchanged. This follows Wednesday's softer than anticipated consumer price index report, reinforcing the idea that inflation may be cooling for now. While some analysts welcome the moderation in prices, Stifel warned that the trend remains uncertain, especially given recent months of persistent inflationary pressures. Analysts will closely watch the personal consumption expenditures report next month, which could further clarify the Federal Reserve's stance on rate cuts. President Donald Trump reaffirmed his commitment to imposing global reciprocal tariffs on April 2nd, further rattling markets. He also threatened 200% tariffs on alcohol imports from the European Union, responding to the bloc's countermeasures against U.S. steel and aluminum tariffs. Commerce Secretary Howard Lutnick and U.S. Trade Representative Jamieson Greer are scheduled to meet with Ontario Premier Doug Ford on Thursday to discuss revisions to the USMCA trade deal. Tensions remain high after Ford proposed a 25% surcharge on electricity exported to the U.S., which he later suspended following threats from Trump to double tariffs on Canadian steel and aluminum up to 50%. Let's see here. Tech stocks react to corporate announcements. Intel surged 14% after announcing an appointment of Lip Bao Tan as CEO. Sounds like a chapstick or something. Set to take effect March 18th. Adobe plunged 13% after issuing weak Q2 guidance, despite better than expected quarterly earnings. SentinelOne dropped 5% after providing disappointing quarterly forecast, and Tesla continued its sell-off, erasing recent gains. Markets remain volatile as inflation concerns and trade policy uncertainty weigh heavily on market sentiment. Well, yeah, is what it is. I mean, not really surprised from my point of view. We were due for a downturn, bear market, black swan, whatever you want to call it, some sort of an event where the market goes that way. And we were due, in my opinion, in 2020. And, COVID gave the perfect excuse to print a ton of money, increase the money supply by 40%, so that the average person who, the Joe Schmo who just, watches their local news is like, looking around, everything's fine. What are you talking about? Well, within 2 years, the inflation spiked by the summer of 22. People like Janet Yellen were like, oh, it's transitory. Don't worry about it. Well, transitory is a fancy word for temporary. And I haven't seen any deflation in any prices across the board. So anyways. All right. Well, let's dive into the some data here. The February PPI report from First Trust. Mr. Andrew Opdyke put this together. After 2 months of sharp increases, producer prices remain flat in February, providing a temporary respite from inflation worries. However, 1 month's data does not define a trend, and the broader inflationary pressures remain. Over the past year, producer prices have risen 3.2%, with pace of inflation accelerating over the past 3 and 6 month periods. This ongoing trend is unlikely to reassure the Federal Reserve that inflation is truly under control. The unchanged producer price index reading in February was not due to steady pricing across sectors, but rather the result of offsetting movements in different categories. Food prices surged 1.7%, driven by a massive 53.6 spike in chicken egg prices. This was counterbalanced by a 1.2% drop in energy prices as gasoline and home heating oil costs have declined. Excluding volatile food and energy prices, core producer prices fell 0.1% in February, but are still up 3.4% year over year, a notable jump from 2.1% in February of last year. The decline in core prices was led by lower margins for vehicle and machinery wholesalers, as well as auto parts and apparel retailers. However, tobacco products and carbon steel scrap saw price increases. Looking ahead, ongoing trade disputes and shifting business purchasing strategies will likely lead to increased price volatility in the coming months. Analysts are monitoring the M2 money supply as a key indicator for inflation trends in 2025. Meanwhile, weekly jobless claims fell by 2,000 to 220,000, and continuing claims declined by 27,000 to 1.87 million. That's a good sign, signaling continued job growth in March despite economic uncertainty. All right, Cougs are up by 12 with 2.5 minutes left. Let's go, boys. All right, last article up here comes from Zero Hedge. The Schumer shutdown. Democrats trapped. Fetterman refuses to shut the government down. So let's see what's going on there. With the shutdown deadline approaching tomorrow, Senate Democrats are in a tough position, trying to block the GOP spending bill passed by the House while avoiding blame if the government shuts down. Minority Leader Chuck Schumer rejected the bill on Wednesday and proposed a 30-day continuing resolution, which he doesn't have the votes for. Meanwhile, Senate Majority Leader John Thune filed cloture on the House bill and made it clear, quote, it's time to fish or cut bait, end quote, with 53 Republican senators. One, Rand Paul, has a definite no, and at least 8 Democrats must cross party lines to keep the government open. 2 possible outcomes. Democrats fold. They agree to pass the House GOP's stopgap spending bill while getting a symbolic vote on their own 28-day funding extension. This allows them to oppose the shutdown on record while letting Republicans push through their bill anyway. It would save face for Schumer with progressives while giving Republicans exactly what they want. Option 2, Democrats hold the line. They block the House bill and trigger a shutdown. This would result in federal worker furloughs, delayed services, and public chaos by Monday. Really? Chaos? Worse, Trump's Office of Management and Budget, the OMB, will control how painful the shutdown becomes, ensuring Democrats feel maximum pressure. The problem for Schumer, the House is gone until March 24th, meaning no quick fix. Eventually, Democrats will have to explain why shutting down the government over a doomed CR was worth it. Either way, Trump and Musk are watching from the sidelines, ready to make their next move while Washington stumbles yet again. I say shut it down. Federal government doesn't do anything of value for the average everyday American. You could say, well, what about our military? Well, they're on the other side of the planet, creating enemies that we don't really want. They do nothing to protect our own borders. So, I could say you could cut the military by 75%. We wouldn't even notice. I mean, maybe the people in Iraq and Afghanistan would notice because they wouldn't have bombs dropped on their heads all the time. But, here locally, we wouldn't notice anything. All right. Well, that's everything that I wanted to talk about today. So if anyone needs to get in touch with me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. Be glad to help. All right. Well, let's hope the Cougs, they got a minute 51 left, still up by 12. Let's hope they pull this out. Hope everyone has a wonderful evening, and I'll talk to everyone again next time. Adios.